Good morning students. In the last video I have explained about the second step of the preparation of fund flow statement, that is preparation of ledger accounts with the help of one problem. We have solved one problem in that step, and the third, in this video I am going to explain about the third step of the preparation of the fund flow statement, that is calculation of funds from operation. In order to calculate fund from operation, we have two methods to calculate that. First one is statement method and second one is profit and loss adjustment method. This one I have already explained the format and all. So this first problem is the third problem, that is, so this problem is related to the statement method. So see here, see the problem. Calculate fund from operation from the following profit and loss account of Messrs. Sharada and Company. Here they have given profit and loss account. We have to calculate the fund from operation. So here we can use both the methods, and we can use the statement method or profit and loss adjustment method in order to calculate the fund from operation. So first we'll calculate from the statement method. So here they have given the profit and loss account. Here we have all the expenses that are debited to profit and loss and all the incomes we have. Here we have the opening gross profit and here it is the net profit. We'll see the solution. Statement method, that is calculation of funds from operation. So this is the format under statement method in order to calculate the funds from operation, that is particulars and to amount column. This is outer column, this is inner column. So first we have to take the net profit. So what is the net profit given in the problem? See here, to net profit 2,40,000. So write that 2,40,000 here in the outer column. So for this we have to add the non-fund items debited to profit and loss account. So what are non-fund items? Non-fund items means these are the paper transactions that will be recorded only in the books of accounts, that will not have any effect on the fund of the business, so it will not increase or decrease the fund of the organization. So it will not affect the fund of the organization or the operations of the business. So we have to add those items, that is non-fund or non-operating items that are debited to profit and loss account. So see the problem here. The items we have that are debited to profit and loss account, we have salaries paid to the workers. So here the salaries means it is related to the operations of the business, the persons who are working for the business. So it is not a non-fund item. Next, commission. Also it is also commission paid, so it is also related to the business operation. So it is also a non-fund, it is not a non-fund item. Next, rent paid. So it is also related to business operation, so it is a operating expense. Next, provision for depreciation. So here depreciation is for the fixed asset, right? So provisions made for the depreciation means it is not affect the fund of the operation, it is related to the fixed asset. So this one is the non-fund item. We have to write that provision for depreciation 28,000. So write that provision for depreciation 28,000. Next one is discount allowed. When we sell the goods, at that time discount is allowed. So this is related to the operation, so don't consider that. Next, transfer to general reserve. So this general reserve, here we are transferring to the general reserve, so it will not affect the operations or fund of the business. So this one is the non-fund item. Take that, transfer to general reserve 40,000. So write that transfer to general reserve 40,000. Next one is provision for tax. So here the provisions made to pay the tax. So this is also it will not affect the fund. So it is a non-fund item, that is 20,000. Write that here, provision for taxation or tax 20,000. Next one is loss on sale of investment. Here we are selling the investment and we are incurring the loss. So this is also related to the investment, so it will not affect the operations, or it is not a operating expense, it is a non-fund item. So we have to consider that 10,000. So write that loss on sale of investment 10,000. Next one is Discount on issue of debentures. Here we are issuing the debentures and we are allowing discount. We are giving discount. So this is related to the debentures. So it is not a operations. It is not related to operations of the business. It is a non-fund items. We have to take that discount on issue of debentures 4,000. So write that discount on issue of debentures. Write discount on issue of debentures 4,000. Next one is preliminary expenses. So what is preliminary expenses? Preliminary expenses means the expenses incurred for the incorporation of the business or startup of the business. Maybe incorporation expenses or logo expenses. So here this expense is incurred before starting the operations of the business. So this is also non-fund item. Write that 6,000 here. So the preliminary expenses 6,000. Then selling expenses. So selling means it is related to the operation of the business. So it is, don't consider this. Next, net profit we have already taken. So we have done with the debits, the items that are debited to profit and loss account. So we have recorded all the non-fund items debited to profit and loss account. So add these values and write the total here. So when we add all these values, you will get 1,08,000. For 2,40,000, that is net profit, you have to add 1,08,000. You will get 3,48,000. From this, you have to deduct the non-fund items credited to profit and loss account. Now we have to take the items that are credited to profit and loss account. See here, first we have the gross profit. So gross profit won't come here. Then profit on sale of machine. Here it is related to the machine. So it is a non-fund item. We have to consider that. Profit on sale of machine 8,000. Next one is dividend received. Here the company has, here we have invested in some other companies or in some other place, and we have received the dividend. So it is not related to, it will not affect the fund of the business. So it is also a non-fund item. We have to consider this. That is dividend received 4,000. Next one is refund of tax. So what is the refund of tax? Here the company has paid the tax if there is to the tax to the government. So if there is any excess amount paid by the company to the government, then the government will return that amount. So that is the refund of the tax. So it will not affect the fund of the organization. So it is also non-fund item. We have to consider that. So refund of tax is 6,000. So add these four values, you will get 18,000. From 3,48,000, see here, less. So you have to deduct the non-fund items credited to profit and loss account. You will get fund from operation. If we get the positive figure, that is funds from, then we have to consider that it is funds from operation. If it is a negative figure here, then it is a fund to operation. So this is the first method of statement method, that is first method of calculation of the funds from operation. We'll see the next method. So second method of calculation of funds from operation is the adjusted profit and loss account or profit and loss adjustment account. So this problem is related to that, or here they asked to see the problem from the following profit and loss account of Messrs. Sheila and Company Limited, calculate fund from operation, they have told. So this problem will calculate with the help of second method, that is profit and loss adjustment method. So see the problem, profit and loss account of Messrs. Sheila and Company Limited for the year ending 31st March 2014. Here they have given the information, that is the end of this. So closing information they have given. So end of the year information they have given. So here we have all the items debited to profit and loss account and all the items credited to profit and loss account. See the solution. Adjusted profit and loss account, debit, credit, particulars amount. So first this side we have to take all the items that are debited to, all the non-fund items that are debited to profit and loss account. Here all the non-fund items that are credited to profit and loss account. And first we have to write the opening balance. So by balance brought down. See, if they have given 2-year information, 2014 and 2015, then 2014 will be opening balance, 2015 will be closing balance. But here they have mentioned only, they have already mentioned it is for the end of the year. That means it is the closing value. So opening balance we have to write nil because they have not given information. So buy balance brought down is nil. Next we have to take the items that are debited, non-fund items that are debited. So see the problem, printing and stationery account. So it is printing and stationery, it is related to the operation of the business, and it will affect the fund of the business, so don't consider this. Next one is depreciation account. So depreciation means it is related to the fixed asset. So here the depreciation is charged at the end of the every year. So depreciation is a non-fund item, so it will not affect the fund. So you have to take this to depreciation account 4,000. So write that to depreciation account 4,000. Next, cleaning charges. So cleaning charges means it is related to the operation, so it will affect the fund, so don't take that. Next, to preliminary expenses written off. So I have explained what is preliminary expenses. So this one is written off. So this is a non-fund item. Take that. Preliminary expenses written off, that is 3,000. Next, goodwill written off. So goodwill is an intangible asset that is written off, means it is decreased, so it will not affect the fund, so it is a non-fund item. Goodwill written off 2,000. So write that to goodwill written off 2,000. Next, provision for taxation account. So this is the also non-fund item. So provision for taxation account 3,000. Next is the proposed dividend. Here proposed dividend means here we are planning to pay the dividend. So this year we are just telling that, the company is just telling that it will pay the dividend, that is proposed dividend. So actually it is not paying, so it will not affect the fund of the business. So proposed dividend is 6,000. It is also non-fund item, so can take that. Next one is here the conveyance expenses account. What is conveyance expenses account? Here conveyance expenses account means the transportation expenses that are incurred by the company in order to provide transportation to the staff of the company. Here they will provide transportation to the staff members, those who are working in the company will provide. So that is the expense, conveyance expense. So it is related to the operation, it will affect the fund, so don't consider this. Next is the net profit. So net profit is the closing balance of profit and loss account, right? So the closing balance of profit and loss account will be the closing balance. Here we have to take two balance carried down, that is closing balance of profit and loss account 34,000. So we have recorded all the items, non-fund items debited to profit and loss account. Now we have to take the items, non-fund items that are credited. First we have gross profit, so it won't come here. Next is the profit on sale of fixed asset. So it is a non-fund item, we have to take that. By profit on sale of fixed asset 5,000. So we have recorded all the non-fund items that are credited to profit and loss account. Now we have to make a total of both the sides. So the total of this side is 52,000 and here it is less. So write that 52,000 both the sides. So this side it is 52,000, write that both the sides, and here you have to find out the difference. 52,000 minus 5,000, you will get 47,000. So it is considered, the difference balancing figure is considered as the funds from operation. If the balancing figure is in the credit side, then it is funds from operation. If it is in the debit side, then it is fund to operation. So these are the two methods to calculate the funds from operation. Thank you.